Hey everyone! In today's video, I'm going to reveal one of the most effective and beginner-friendly strategies you can use with the MACD indicator. This isn't just another basic tutorial. I'll break down exactly how MACD works, why it's powerful, and how to use it in both trending and ranging markets. So without wasting any more time, let's get started. Understanding the MACD indicator. First things first, what is MACD? MACD stands for Moving Average Convergence Divergence. It's a momentum and trend following indicator that helps traders identify changes in price strength and direction. Let's go ahead and add it to our chart. Open your Indicators tab. Search for MACD. Select the default one that appears on top. Once it's on your chart, you'll notice for components. First MACD line, this is the fast-moving line. It responds quickly to price changes. Second signal line, this one moves slower and appears smoother. Third histogram, those bars represent the difference between the MACD line and the signal line. Fourth zero line, the central horizontal line. It helps us understand whether momentum is above or below neutral. Key insight: when the MACD line crosses above the signal line, it's a bullish signal. When it crosses below, it's bearish. And the histogram gives you a visual of how strong that momentum is. If the bars are growing, momentum is increasing. If they're shrinking, the momentum is weakening. The distance between the MACD and signal lines determines the height of the histogram bars. So now that you understand how MACD is built, let's move into how we use it effectively. MACD versus simple moving averages. You might be wondering, since MACD is based on moving averages, why not just use moving averages directly? Great question. Let me show you a quick comparison. I've set up two exponential moving averages, one with a 12 period and one with a 26 period, exactly what MACD uses internally. What you'll notice is this: when these two MAs cross each other, we also get a reaction on the MACD, but the MACD line is crossing the zero line, not the signal line. The key difference? With MACD, we are focusing on the cross between the MACD line and the signal line, and that gives us signals earlier than just watching MA crossovers. So MACD is essentially a refined, faster signal built on moving average logic, and that's why I personally prefer using it as my primary momentum indicator. The mistake most traders make now, here's where many beginner traders go wrong. They use MACD by itself, without considering the broader market context. Let me show you an example. Let's say MACD gives you a bullish crossover, a classic buy signal. But when you look at the overall market, it's clearly in a downtrend. These are conflicting signals. MACD says up, but the market says down. What's happening here? MACD only reflects short-term momentum. It doesn't tell you the direction of the overall trend. And that's a problem, because one of the golden rules in trading is never trade against the trend. A high probability strategy, MACD plus 100 EMA. So how do we fix this? We combine MACD with a trend filter, something that tells us whether we're in an uptrend or downtrend. Step 1. Identify the long-term trend. If price is above the 100 EMA, we consider only buy signals. If price is below the 100 EMA, we consider only sell signals. Step 2. Wait for a MACD crossover in the same direction. In an uptrend, wait for MACD to cross upwards. In a downtrend, wait for MACD to cross downwards. Step 3. Set up your trade. Entry: when the MACD crossover occurs. Stop loss: just below the most recent swing low. For longs, take profit. Set at 1.5x your stop loss. This strategy filters out bad trades by making sure we're aligned with the trend and using MACD for precise entry timing. Let's look at a couple of trade examples. Example 1. Price is above EMA 100. MACD crosses up. You enter long. The trade hits target clean. Profitable setup. Example 2. Price is below EMA 100. MACD crosses down. You enter short. Again, the trade reaches target smoothly. This strategy is especially great for beginners. Simple rules, clear logic, and high win potential. Advanced strategy, MACD plus price action. But what if the market isn't trending? What if price is moving sideways in a range? In those conditions, MACD will give a lot of false signals because momentum keeps flipping. So here's an advanced version of the MACD strategy, combining it with price action and key levels. Here's how it works. Step 1. Choose a higher time frame, for example, the 4-hour chart. Step 2. Identify a strong key level, support or resistance. Step 3. Wait for price to return to that level. For instance, maybe price hit a resistance zone in the past and drop. That zone becomes your area of interest. Now, when price approaches that level again, we expect a possible reversal. But and this is important, just touching a key level doesn't guarantee a bounce. That's why we need confirmation. Most traders will wait for a MACD crossover on the same time frame, but by the time it happens, price has often already started moving, and you end up entering late. Here's a powerful trick. Zoom in 2 time frames lower. So if you're on the 4-hour chart, drop to the 2-hour. Wait for a MACD crossover, there you'll get an earlier signal. Example: on the 4H, Price touches resistance. You zoom to 2H and get a MACD cross downward. Enter short with better timing, set stop above resistance, and take profit at 1.5x risk. This technique works both ways for shorts and longs. So there you have it, two powerful MACD strategies. First, a simple, beginner-friendly approach using the 100 EMA. Second, a more advanced method with price action and lower time frames. If you found this useful, all I ask is for a quick like and a subscribe. Just 2 clicks, but it helps the channel more than you know. Thanks for watching, and I'll see you in the next video.